as part of Texas REIAs, every time we get together, we share what's happening right now in the market. So I'm going to break that down, and what I'm going to do is I'm going to break it down from a couple different aspects. So we're going to look at Texas as a whole, and then we're going to look at some of the major markets here in Texas. I put up an eye chart, so for those of you guys who are listening on the podcast, I'll pull out some of the specific numbers that are here. For those of you guys who are watching in the back and cannot see, think of your 20/20 vision just needs a little correction, or you need to get closer. Or how about this? I'll just go through some of the top information on this chart that I've got up here. So for all of Texas, last month, the average sales price was up 13% to $441,000. Closed sales last month were down. They were down 9.5%, primarily due to the fact that many buyers have dropped out of the market and have started renting because we've seen some interest rate increases over the last several months. Active listings were up 20,000 units just versus what they were last month, and they were up about 22,000 units from where they were this exact same time last year. So we're adding inventory very quickly right now. And then again, to highlight the searchlight effect, the Drunkard's principle, you'll notice that again, your deals are not in the MLS, right? That's where the light is. But last month, for example, for all of Texas, houses in all of Texas, they're close to their original list price. That ratio was 100.9%. So I want to make sure we look in other places. In the Houston market, average sales price last month, $436,500, up 11% versus where it was the same time last year. Sales were down. They were down 8.6%. And pending sales, which is our closest leading indicator of what closed sales will be next month, also down 7.7%. Now, what are people doing instead? If they're not buying, they're leasing. So leases actually in Houston went up 25% year over year, and the lease prices went up 11% year over year. So it used to be, for the last 2 years, buyers were writing sellers love letters. Some of you listing agents know what I'm talking about. So you're getting this letter from the buyer of how great your house is and how much our family's going to love it, even though they can't say any of that stuff because they violate all these fair housing rules, and the sellers can't look at it because it violates fair housing rules, but that sort of stuff happens. So what's happening now is tenants are writing landlords. This is never to be foreseen and never to be heretofore seen again after what we're going through right now. But we are seeing, instead of having multiple offers above list price on houses, even though the housing market is still very strong, just look at the average price, we are seeing multiple offers above lease price on rental properties right now. So there's been a little flip going on. So how many of you guys own rental property right now? It's a good time to be a landlord. You know, my husband keeps saying to me, Shanoa, because of this inflation thing, like we're no longer doing year-long leases. You know, we're doing month-long leases because I want the opportunity to raise the rents if I need to, right? So this is a shifting market that's very exciting. In the Austin market, average sales price last month up 13% to $669,000. But, oh, ouch, man. Austin market saw closed sales go down by 20% last year. Yes, I know, wow, yeah, that's big time, that's big time. And pending sales are down by over 20% too. But the biggest thing here, active listings, this same time last year, were just under 2,300 active listings. We actually sold more houses than we had active listings. So basically everything that was coming on the market was flying off and getting sold. Right now, or last month, we saw over a 200+% increase in year-over-year active listings. So we're building that inventory back very quickly. Now, I say that, but it's all relative because the same time last year, Austin had a 0.6 month supply of inventory. So basically, they had about a 2.5 week supply of inventory, whereas in a normal market, it's closer to about 6 months of inventory. So now I would call Austin at 2.1 months of inventory, still a seller's market on fire, okay? And again, that's why you're still seeing those prices go up. Close to ask in Austin, 102.3%. Again, your deal is not in the MLS. In the Dallas Fort Worth market, average price up 19% to $537,000 last year. Closed sales were down 8%. Inventory, active listings up 60%. Leases were up 19%. Pending sales, again, our closest leading indicator of what closed sales will be next month, down 10%. So we expect that our volume decreases. We will continue to see those probably for the next several months. So best case scenario, Dallas will end flat because we had a good first quarter, but we'll kind of see how the third and fourth quarter shake out for us here. In San Antonio, the average sales price, $401,000, up 18%, but the sales in San Antonio last month down 9%. Pending listings down about 10%. Leases, they were up 31% year over year in San Antonio, and the lease price up 10% year over year in San Antonio. So this gives you an idea of where we are in the market right now. Changing very quickly. Just add a couple of 0.75% interest rate increases, and people get cooled, and people say, I want to wait, and people say, I want to sit on the sidelines. Now, for those of you guys who are part of our earlier session, Damien and I talked a little bit about some of the different strategies that you use when a market is changing like this.